Everyone, hope everything is going well. Today, Jerome Powell, there was a cut of 25 basis points in the Fed funds rate, but he was saying that they're not going to cut as much next year. And as a result, the algos, the traders, they just started hitting the sell button. Sell, 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 sell. And what I find quite interesting about this is the economic data isn't as rosy as he's saying it, or what the mainstream is saying it out to be. You have to remember the Biden administration, they revised jobs a few months before the election, and you have to realize what's actually happening beneath the surface in terms of jobs. Are more layoffs going to happen in the next year? I do believe so. And, I don't like the Federal Reserve, but the way that, they are supposed to handle it is look at inflation and look at unemployment. And they want to have full employment. So, they don't want unemployment to be too high. Now, what is going to end up happening, in my opinion, because what we're seeing right now with government spending, I'm not a big government guy, but if you're trying to cut the level of increase in spending, that means less money is pumped into the system. So that's potentially a headwind coming into the next year or two, in my opinion. The other thing that I'm looking at, a lot of people don't look at, is reverse repos. Reverse repos is what, $130 billion right now, and one slightly. So you're going to see liquidity get drained from the system because the reverse repos were pumping up the markets, okay? Now, could we see one more move higher in the stock market? Sure. And I'm quite interested, though, in looking at the US dollar, okay? The reality of the situation is the higher the dollar goes, the more pressure it's going to put on the stock market, in my opinion. The lower it goes, well, it's going to help the markets. Now we shall see. Yeah, I do have, a Forex position on, betting that the dollar's going to go lower. I'm probably going to look at the euro or the Japanese yen. This is, I think, from a longer term picture, the yen looks interesting, where I do believe it's going to go lower. I'm not looking at the futures market, I'm just looking at the Forex. So some people are saying, 120. Some veteran traders that I looked at the other day. So if it's 120, and where is it right now? 155. I get it. Today's a BOJ meeting, so you're going to see volatility and all of that. I don't have too much in my Forex account, but because of volatility, I need to probably move some money around and, maintain that sufficient capital in there. But if risk comes off, what usually happens is the yen carry trade no longer is in play. Because what you've seen the last few years is the yen carry trade in action, where you're seeing liquidity from this yen carry trade get pumped into the markets, and the Japanese yen weakens. And it's all about, borrowing, taking your money, borrowing it in a weaker currency like the yen, and then speculating. It only works when the market keeps on going higher and the yen keeps on getting weaker. What happens when that no longer happens? It pops. The whole system pops. You could see the crash of 2008, yen carry trade, right? Unwound. And what was quite interesting is it's the other way around, where if the yen weakens, like if you go to 2011 with the Fukushima, where the Japanese yen was at 80, you know, market started to rip. Is liquidity coming from that, right? It's all about liquidity. You can look at technical charts all you want. And that's why I started buying puts a little earlier than the crowd. Took some profits on some longer dated puts, but I haven't sold all the puts and not planning to. So next time we see the market rip, I'm probably going to be adding those put positions once again, hopefully at a lower price. I think I sold Bank of America puts today, like Broadcom. I thought that I was going to lose money on Broadcom, but I mean a little bit on that put option. But when you see the VIX RSI at like 80 and way above the Bollinger Band, I expect the markets to rip. Just a little bit, at least. And not only that, you're seeing the VIX at 28, right? Close to 28. You have that type of price action above the Bollinger Band, okay, rally. So rally comes, what I'll probably do is, buy some puts once again in some of those banks and, go from there. I will have, from a longer term perspective, some put options in my portfolio and not, sell those. But it is what it is. I do expect trouble ahead because it's all about liquidity. I don't care if Trump is in office or someone else is in office. I need to look at markets from an unbiased point of view and take my own personal opinion out. And, people are going to say tariffs, this and that. Once again, it's all about liquidity. The yen starts to roll over and get stronger, and you're also seeing, reverse repos getting close to zero. That's a sign liquidity is not getting pumped into the system as much as it was. So I'll keep a close eye on that. Let me know your thoughts about the FOMC, and we'll talk later. See ya. Bye.